Good morning, everyone. Today is Monday, Labor Day weekend, so no trading for it's a U.S. bank holiday in Canada too, I think. So no North American traders. Pretty much everybody's drinking rosé in Hamptons. So you shouldn't be trading either, honestly. But this is a private video for you, a setup that I've noticed, two setups actually for gold, and that's what I'm going to be looking for come Tuesday, a London session or US sessions. So this is actually a re-recording of the video. I tried several times and my the trading view was screwing up. So I'm going to make it shorter because I'm tired of repeating myself over and over and over again. All right. Anyway, let's go. This is a daily chart of gold. As you can see, we are right at the resistance, and now we're trickling slowly down. A small pullback is happening right off the resistance area. Now, few things to take notice. First of all, if you remember the lesson on volume profile, and that lesson is available as a bonus section in the course curriculum, so you can rewatch it. You can see that the liquidity is quite thin in this area here, right above these stops. And then it starts again the liquidity pool around the 1860 to 1870 levels. What does it tell me? Well, the swing shorts, the sellers who are swing traders, they were selling this price action, and their stops are at this level here. So if you were shorting somewhere here, your natural stop would be above the swing high, which is here. And I'll be very surprised if we don't push through, bullish momentum doesn't push through and take these stops, because they're apparent as a night and day. And I think an easy play is a day trade that I'll show you next. So we are right at this resistance. I'm not shorting here with the stop here, because I think the opposite is going to happen. We're going to punch through this and take these stops. So how are we going to do this? All right. This is another scenario which we'll talk about later. But if you remember our session on the Heikin-Ashi day trading, which is also I re-recorded a small review of the system and uploaded it as a bonus section in your trading course. You can rewatch it, but basically you can see that there is a bullish run into the resistance. Actually, let's switch back and it'll be better seen on the normal chart. So this is this cluster. This is the resistance we are right now. As you can see, which way is the impulsive action? Impulse, correction, impulse, correction, impulse, corrective. See how the impulsive bullish candles, the size of those candles, and do you see the size of the pullback? So the bulls are dominating this cycle still. And what I'm looking at the bull flag, and what I want to see is basically the price action retesting the moving average cloud into this support zone, and then a breakout from this trend line. So meaning on a closing basis. And that's where we're going to hop on our Heikin-Ashi day trading system. And we're going to start looking for the setup. So first of all, it has to be on a 1 hour time frame. It doesn't have to be, but that's how we use it. And the bullish momentum is still here on using the apexbull momentum indicator. As you can see, it's still positive. And so what we need is a green candle closing above this resistance, or for this moving average cloud support and horizontal support. Moving average cloud support, right? Direction is up. The trend, longer term trend is up. We had a pump, a pullback, and now I want to see bullish momentum come back in. I'm not going to be trading this today as a day trade. I'm waiting for this setup for at least London Open. So in 12 hours. So maybe we're going to have a fake one. I'm not interested in it. I'm going to be only looking at this starting early European session. if we see that bullish momentum, we're gonna hop on that, and but all the prerequisites have to be lined up. Like I said, the what are the prerequisites? The On a 1 hour time frame, we have to have a bullish close, a green candle, with the bullish momentum still intact. Then we're gonna hop on the 15-minute time frame. As you can see, the we had the price action retreated into the moving averages, right? And the green candle. But why wouldn't you buy this green candle? Well, because the momentum switched to negative. So this momentum needs to switch to bullish momentum. The moving averages have to have a bullish crossover like it did here, with the green candles being printed and obviously price closing above this resistance. That's when we're going to start looking for longs. And I think we can catch that huge wave from 1825 level, like mid 1820s, catch this stop loss run right right into this liquidity pool here. So the price will punch through this. Since the order book is very thin here, it can chew through them easily before it will would find the next liquidity pool where the price will meet a lot of selling orders and a lot of profit taking will ensue. So it will start trickling down. So this is what we're going to rebuy, something like this. So I want to catch that stop run. We go to the mid 1860s, and then we have a pullback, and then we're going to look for longs again. This is this is pretty much what I'm looking at. And to catch that initial run up, we're going to be using our day trading method. Now, you can also play a very conservative. If that day trading setup doesn't happen, and we actually keep on selling, I will be looking for buys around this trend line support here. So let's say there is no the day trade setup doesn't materialize, and the sellers actually come in and protect the stops here. So some big player comes in, pushes the price down. So the stops, the bullish stops, are above this swing low. So the price will push it down. It'll take the stops. It'll spike into the support zone, where I'll be looking for buys again to take it to the upside. So this is the scenario if the day trade doesn't set up. And obviously, my scenario A, my preference is for the day trade scenario to pan out like I've described here. So we are approaching a support zone into the moving average cloud, blah, blah, blah. So let's just wait for the green bars to come in and start showing us basically bullish momentum come in, and we can start getting long with using the 15-minute time frame or 5-minute time frame. So this is the day trade setup, and that's a conservative, more of a swing type of setup into this support here. So either way, we're going to be looking at what the price does, and we have contingencies for both. If it sells off, we got it here. If the bullish momentum comes in, we're going to get it there. So that's what I'm looking at for Tuesday. This is an exclusive video for you guys for Inner Circle. So enjoy. If you have any questions, just ping me. Hope it helps. Enjoy.